Hi there. So the numbers have come out for December, and what I want to do here today is not get into the micro economics or micro numbers and details, but talk about macros, more of a high level of what happened quickly in December and then in 2017. So let's get right into the details here. So a couple things that I wanted to show you is you can see the employment numbers in Toronto and the city went up by 3.8% and inflation was up 2.1%. So that's critical on a macro level because as employment improves and as inflation, more jobs are created, more spending power, inflation goes up, the Bank of Canada will respond by increasing the benchmark rate, which drives the prime rate for variable mortgages and lines of credit. So that's anticipated to happen next week, January the 17th, increasing the benchmark rate by a quarter point, and then who knows what will happen down the line. So that's something to look out for, is the increase in the cost of borrowing moving forward in 2018. Now, with respect to the details, media headlines, listings up 51% to 172% and all this good stuff. And it's for the simple reason is sellers were motivated to sell their properties and buyers were motivated to buy, have a purchase agreement in place before December, or I should say before January the 1st, when the new stress test rules kicked in for mortgage financing. So this is why you see this spike in listings for the past month of December 2017. With respect to the city, detached was down a little bit. Semis were up, which was pretty interesting, and then the condo market up at 14%. So that leveled off. The previous month it was 20 plus, but it's come down to the 14% appreciation. It's still hot, it's still strong, but I think anywhere from 5 to 8% is a good healthy range and sustainable over the long term. Quickly here, the condo, I just want to show you the condo market. So this is quickly C1, C8, downtown core. The east core is very hot, so it was 110% sales to active listings, so things were selling fast in the month of December, and pretty active also on west of Yonge Street. Now, this is where I wanted to spend a little bit more time and focus. So again, just stepping back from month of December and looking at the big picture and trends of the real estate market. So here I've made some highlights and points for the stats which cover 2005 up to 2017, so 12 years. What you'll see is I ranked the years in sales. So 2016 was the strongest year, 2015 was the second strongest, and then 2014 was fourth, and 2007 was the third. Now this year, the past year, 2017, I should say, came in at 92,394, so just under 2014 by 400-ish less sales, so just call it fourth. So 2017 was the fourth strongest year with respect to sales since 2005. So if you look at the trend, 2014 picked up, 2015 hot, 2016 really hot, and then 2017 leveled off. So again, this is a good number. 92,000 is healthy because a couple things to take into account. One is increased my immigration to the city in the GTA, which puts in more demand, population growth, as well as employment. So more jobs, more people. That trend of sales activities will increase gradually. Now, last year, I should say 2 years ago, 2016 was a bit of an anomaly because it was extremely high at 113. 2015 was very strong as well, but I think moving forward we should be in a balanced, healthy territory for the real estate market, which is good. Now, I've made a few points that I wanted to bring up. So let's just go back here. So one thing with this data that, again, this is where we get into this peeling the onion. One thing the data doesn't show is active listings and new listings. So let's just say somebody listed their house or property for $1 million. It sat on the market for a couple of weeks. They didn't get what they want. They take it off, and then they relist it at $950. So that counts as two because it shows an active listing, and then it gets terminated, and then it shows up again as a new listing. So this is one thing when I talk about data and active listings, new listings. This is all, it is at a higher level, so it's really important to really focus down on a neighborhood and look at the last 30, 60, 90 days, trying to understand what's happening or what has happened in that specific pocket, because real estate is very, very local. And yes, we talk about the city and C1, C2 and all these different areas, but even at that, you have to really drill down into specific intersections and pockets and sub neighborhoods to understand what's happening in that specific area. So that's just one thing to keep in mind. This data doesn't reflect that. And again, I do not know how many properties were taken off the market and relisted without drilling deeper into a specific pocket. So just keep that in mind. The other thing is January. So it'll be interesting to see. Today's January the 10th. We're a few days, well, technically 10 days, but realistically 3 days into the new year. That's when schools were back 3 days ago. So the markets will pick up pace slowly. Now, living in Canada, the X factor is the weather. So we've had so far a pretty bad winter. It's been really cold. So we'll have to see what happens with this weather moving forward, because the weather could have an impact on the number of listings that come onto the market, and until the market picks up pace once we get to the spring season. So we'll have to see how the weather impacts the transition from winter to spring with respect to listings and activity. Now, the other thing is, I believe, well, we'll see for now. I believe regulators are done. They brought in, the mortgage stress test. They've changed lending rules. They've done a lot of changes. I think they'll sit on the sidelines for this year, hopefully. And the rest of the work to be done will be done by the Bank of Canada. So I think next week on the 17th, they'll increase by a quarter point on the benchmark rate, which will impact variable mortgages as well as lines of credit. And typically the bond market, which drives the fixed mortgage rates, will move up also. But I think that'll happen next week. And then maybe there's one more increase down the line this year. So if you think about it, we've had 2 or 3, I think it was 3 last year. Maybe one, highly likely one next week, and then maybe another one. So I think pretty much the regulators, the Bank of Canada, all those guys should be done. Usually they get all active when there are elections coming up and they start bringing new rules and regulations and a whole bunch of stuff, but they should be done. So having those guys on the sidelines is a good thing. Let the market work itself through all these regulations, higher rates and adjustments and all those things that came into effect. And I think we should be in for a healthy, steady, stable market for 2018. And we'll see. That's obviously if government or regulators don't step in. So just keep that in mind. Now, one thing that caught my attention is New Zealand. Population is 4.7 million. It's the same size population-wise as Ireland. 4.7 is smaller than the GTA. We're at 6 now, probably 6 million. They have banned foreign ownership completely. No foreign buyers can buy a property in New Zealand. So I don't know. Hopefully that doesn't come here. I think it's a bit of an extreme policy, but politicians are known for some interesting and crazy ideas. So we'll just have to wait and see what happens if the market continues to be extremely hot, which I don't believe that will be the case. I think there have been so many changes in the last little while that the real estate market should be healthy, steady, and stable. So just look out for any possible changes down the line. Anyways, that's all I want to discuss with you for December 2017, and just kind of look back at 2017 and how it fits into the last 12 years, and then a bit of an outlook for 2018. If you have any questions with respect to real estate, please feel free to connect. Love to chat with you at any time. Thank you so much and have a great day. Bye for now.